Let me give you an overview of an IRS offer and compromise. So the thing here is that basically when you are looking for an offer and compromise, you're trying to settle your debt for less than you owe. That's the bottom line. So an offer and compromise, OIC, allows you to settle your tax debt for less than the full amount you owe. Basically, let's say you actually owe the IRS $10,000 and you realize that, listen, based on my financial situation, I think I will never be able to actually pay those 10 grand. So what do? You actually send the IRS and you actually present to the IRS an offer and compromise and say, listen, I agree to actually pay 3,000 out of the 10 grand. So instead of paying the 10 grand, you guys can actually chase me all over the place, but I cannot pay. So I actually agree to pay $3,000. So that's your offer in compromise. And basically, it may be a legitimate option if you cannot pay your full tax liability, or doing so creates a financial hardship for you and your family. And so the IRS will consider your unique set of facts and circumstances when actually evaluating your offer and compromise. So actually, the IRS will look at four things. They'll look at four important elements. They'll look at your ability to pay, your income, your expenses, your asset equity. And this is really important to understand that when they actually look at your offer and compromise, sometimes they look at your household income, not just your individual income, because especially when you file jointly, then the IRS will look at your household, your entire household. And so the IRS will generally approve an offer and compromise when the amount you offer represents the most they can expect to collect within a reasonable period of time. So, and one thing you want to think about pretty importantly is that you want to explore all other payment options before you submit an OIC, offer and compromise, because the OIC program is not for everyone. And if you hire a tax professional to help you file an offer, be sure to check his or her qualifications. The whole thing is that because if you're saying to the IRS, I don't have money, and they see that you have cash to actually hire someone, this could be contradictory. But again, if we're talking about very large tax debts, let's say 6 digits, then it's really worth it. Okay. But overall, please make sure that you actually look at those 4 circumstances before you actually file an OIC: your ability to pay, your income, your expenses, and your asset equity. So who is really eligible for an OIC? By the way, welcome back to the channel. We really appreciate having you here. Just a pleasure. We're having a wonderful conversation about an IRS offer and compromise. So the thing here is that if you want to see if you qualify for this sort of program, there are some steps you need to follow. First, you need to confirm that you are eligible and prepare a preliminary proposal with the offer and compromise pre-qualifier tool. So there is a pre-qualifier tool on the IRS website that actually lets you know whether or not you could be a good candidate for an OIC. So remember, this is not a qualifier, this is a pre-qualifier. Okay. And the thing here is that you are eligible to apply for an offer and compromise if you filed all required tax returns and made all required estimated payments. You're not in an open bankruptcy proceeding. You have a valid extension for a current year return if applying for the current year. And if you are an employer and made tax deposits for the current and past 2 quarters before you apply. So those are the 4 quintessential criteria that the IRS will look at before seeing whether or not, before actually qualifying you for an OIC. Okay, so those are really important. Now, one thing I want to say here is that it's always important to have all the paperwork, all your documents. Okay, and we're speaking about record keeping because the IRS, they will ask you, they will dig deeper, they'll contact you, they'll ask you to submit documentation if they don't have it already. So it's always a great idea to be strong when it comes to record keeping so that you can boost your chances of approval. Now, let's talk about if you apply and are not eligible. So if you apply for an offer and compromise and the IRS cannot process your offer for any reason, they will return your application and offer an application fee, and they can apply any offer payments you included to your balance due. So really, those are the two options that the IRS has. This is why a lot of folks who actually owe a lot of cash to the IRS, I was speaking earlier about 6 digits, they hire a tax professional. You want to hire a CPA, you can hire an EA, an enrolled agent, you can hire a tax attorney, or a tax planner in general, somebody who has a great experience when it comes to OICs. You want to hire someone like that to actually handle your whole OIC procedure with the IRS. Now let me talk to you about submitting your application. By the way, I want to really remind everybody of today's topic. We're having a conversation about IRS offer and compromise. How do you qualify? So you need to find forms to submit an application and step-by-step instruction in Form 656B, offer and compromise booklet. Okay, and so the thing here is that you want to complete an application package. This goes back to what I was telling earlier about the importance of record keeping, because you are going to submit a lot of records to the IRS to justify, not only first to justify your offer and compromise, and to actually show the IRS that you are going to stick to a payment plan. See, the whole thing is when you have an offer and compromise, most of the time you pay all at once or within a reasonable period of time. Okay, what I'm trying to say here is that you're not going to tell the IRS, listen, I owe $10,000, but I'm going to pay you guys $3,000, but I will pay you $3,000 over 10 years or over 5 years. They're not going to accept. If they accept $5,000 or if they accept $3,000, then they will want you to pay, let's say, within 1 year or 2 years, so that they can actually collect the cash real quick. Okay, and so you want to actually so the application package, you have Form 433A, OIC individuals, or 433B, OIC businesses, and all required documentation as specified on the forms. And you also have Form 656. You must submit an individual and business tax debt corporation LLC partnership on separate Form 656. What I'm trying to say here is that if you are a business if you have a business, you have to submit the Form 656 for the business, but also for yourself. Because remember, the IRS is looking at a comprehensive they are actually evaluating your entire financial situation comprehensively. So basically, they're looking at your individual income, but also as your business income, business that you own, of course. And so you have to send an application fee of $205. This is non-refundable. And you actually also have to send the initial payment. This is non-refundable also for each Form 656. And you need to actually select a payment option. So your initial payment varies based on your offer and the payment option you choose. So you have lump sum cash, so you can submit an initial payment of 20% of the total offer amount with your application. If the IRS accepts your offer, you will receive written confirmation. You must pay any remaining balance due over on the offer in 5 or fewer payments. Okay, 5 or fewer payments. Then you have periodic payments. So you want to submit your initial payments with your application. You continue to pay the remaining balance in monthly installments while the IRS considers your offer. So if the IRS accepts your offer, continue to pay monthly until it is paid in full. Now let's talk about a few things that are quintessential to this OIC procedure. If you meet the low income certification guidelines, because there are some guidelines for low income certification. So if you meet those guidelines, you don't have to send the application fee or the initial payment. So remember, the application fee is $200, $205. So you don't have to send those if you are considered a low income earner. And you don't have to make monthly installments while the IRS reviews your offer. So basically, the agency is more flexible, or it's more lenient, I would say, when you are in the low income category. Okay, and again, always, if you want details, just you can review the offer and compromise booklet, the Form 656B, or you can just contact your tax practitioner. And number 7, I want to talk to you about understanding the process, because you really need to understand the evaluation process. Okay, while the IRS evaluates your offer, there are a few things you really need to keep in mind. Your non-refundable payments and fees are applied to the tax liability. You may designate payments to a specific tax year and tax debt. The IRS may file a notice of federal tax lien, because they always reserve the right to do whatever they want to do. Okay, that's important. The IRS will suspend other collection activities, and your legal assessments and collection period is extended. You make all required payments per your offer. You don't have to make payments on an existing installment agreements, And what will happen here is that your offer is automatically accepted if the IRS does not make a determination within 2 years of the IRS receipt date. So this does not include any appeal period. So basically, if you don't hear anything from them after 2 years, that means they have accepted de facto and de jure your offer. One thing I want to say here is that please make sure that you actually, on your end, you want to think about incorporating this cash outflow into your budget, and make sure that you never miss any payments. And what we tell our clients usually is to actually automate the transactions, so you can actually instruct your bank, to every month send some money to the IRS. So that way you have a automatic debit, so you don't even have to track it. The thing is that it's a lot easier to do it that way than trying to do things manually, trying to send a check to the IRS every month. God forbid if you forget, this could actually put you back into a worse condition that you were in before even sending the OIC. I want to talk to you about if your offer is accepted. There are a few things you have to do, and if your offer is rejected, there are also a few things you have to do. I want to quickly remind everybody of today's topic. We're having a conversation about IRS offer and compromise, everything that you need to do to qualify. So if your offer is accepted, you must meet all the offer terms listed in Section 7 of Form 656, including filing or required tax returns and making all payments. Okay, so the IRS is pretty strict about this particular condition. In other words, filing or required tax returns. The thing is, even if you owe the IRS and you cannot pay the amount that you owe, it's always important to file tax returns, because the penalty for not filing is greater than the penalty for not paying the full amount. So this should be a great takeaway for everyone listening to us in today's conversation. You always want to file your tax returns. Always. Do not skip years. Do not, even if you don't generate lots of income, it's always better to file so that the IRS has you in their system. And sometimes you can even claim some credits. Who knows? Okay, so the one thing I want to say here is that the IRS does not release federal tax liens until your offer terms are satisfied. Okay, and certain offer information is available for public review by requesting a copy of a public inspection file. So that's if your offer is accepted. So everything is transparent here, okay? But if your offer is rejected, you may appeal a rejection within 30 days using request for appeal of offer and compromise. So everything happens on Form 13711-13711, okay? And it's really important to understand there's a whole procedure, there's a whole protocol that you need to follow once your offer is rejected. And it's, again, going back to what I said earlier, that's why a lot of folks actually would want to hire a tax practitioner to kind of help them actually go through the whole thing, because it can be lengthy, it can be cumbersome, it can be tedious. And the IRS Independent Office of Appeals they actually offer additional assistance on appealing your rejected offer. So the IRS has assistance for you, but again, a lot of folks like to take things in their own hands and hire, quote unquote, their own people, so that you have a specialist. And this could be this person can be a tax attorney, can be a CPA, a certified public accountant, can be also an enrolled agent, or just a regular tax practitioner to kind of help you out. Let me give you a few pro tips here, because we talked about offer and compromise, and the thing is, there are certain things you can do to prevent to be in a situation in the first place where you have to send the IRS an offer and compromise. Okay, so let's talk about tax planning for beginners. Okay, 6 tax strategies and concepts you need to know. Now, one thing I want to say here is that tax planning starts with understanding your tax brackets. You can't really plan for the future if you have no idea where you are today. So the first tax planning tip is to get a grip on what federal tax brackets you're in. Okay, remember that the United States has a progressive tax system. That means people with higher taxable incomes are subject to higher tax rates, while people with lower taxable incomes are subject to lower tax rates. So there are 7 federal income tax brackets. You have 10%, 12%, 22%, 24%, 32%, 35%, and 37%. So no matter which bracket you're in, you probably will not pay that rate on your entire income. There are 2 reasons. You get to subtract tax deductions to actually determine income. That's why your taxable income usually is not the same as your salary or total income, and you don't just multiply your tax brackets by your taxable income. Instead, the government divides your taxable income into chunks and then taxes each chunk at the corresponding rates. Okay, and you have to understand there are differences between tax deductions and tax credits. Tax deductions and tax credits may be the best parts when it comes to preparing your tax return. So tax deductions are specific expenses you have incurred that you can subtract from your taxable income. So basically, they reduce how much of your income is subject to taxes. Tax credits are even better. They give you a dollar for dollar reduction in your tax bill. So a tax credit value at $1,000, for instance, lowers your tax bill by $1,000. So this is really good. And so think about taking the standard deduction versus itemizing based on your situation, okay? And it's always important to actually keep an eye on popular tax deductions and credits. I'm speaking about adoption credits, the American Opportunity Credits, capital loss deduction, charitable contributions, child and dependent care credit, the CDCC, okay? So child tax credits, credits for the elderly and the disabled, earned income tax credit, home office expenses, lifetime learning credit, medical expenses, mortgage interest, property taxes, residential energy credits, and savers credits. And you have to always know what tax records you need to keep. And this is really important because what will happen here is that anything you actually claim on your tax return, you have to be able to substantiate it, okay? So keeping tax records and the documents you use to complete them is critical if you are ever audited. Typically, the IRS has 3 years to decide whether to audit your return, so keep your records for at least that long. You also should hang on to tax records for 3 years if you file a claim for a credit or refund after you filed your original return. Keeping records longer in certain cases is also good, especially if the IRS wants to dig a little further. Okay, so the IRS has a longer limit on auditing you. So we have 6 years if you underreported your income by more than 25%, 7 years if you actually wrote off the loss from a worthless security, and indefinitely if you committed tax fraud or you did not file a tax return. That's why you always have to file a tax return. So when we talk about income, think about your W-2 forms, bank statements, your 1099 miscellaneous, 1099 interest INT, 1099 DIV for dividends, brokerage statements, alimony received, and K-1 forms. And for your expenses and deductions, keep the receipts, the invoices, the alimony paid, statements from charities, gambling losses. For home, you have closing statements, purchase and sales invoice, insurance records, property tax assessment. For retirement accounts, you have Form 5498 IRA contributions, Form 8606 non-deductible IRA contributions, okay, 401k statements, distribution records, annual statements. And other investments, think about transaction data, including individual purchase or sale receipts, okay, and annual statements, of course. And there are a lot of tax strategies to shelter income or cut your tax bill, and those are legal, by the way. You can tweak your W-4. So a W-4 tells your employer how much tax to withhold from your paycheck. Your employer remits the tax to the IRS on your behalf, so you can actually tweak your W-4. You can actually put money in a 401k. You can put money in an IRA, so individual retirement account. You can open a 529 account. You can fund your flexible spending account, your FSA. So there are a lot of things you can do to actually lower your taxable income. And we're speaking about very legal ways though, okay? You can use dependent care flexible spending accounts, so the DC FSAs, or you can maximize your health savings account. So there's a constellation of things you can do to actually lower your taxes. Thank you so much for your attention. Really appreciate it. In today's conversation, we're just talking to you about IRS offers and compromise. So I gave you an overview. I spoke to you about who is eligible. If you apply and are not eligible, what you should do, how to submit your application, how to select a payment option, and what you can think about if you meet the low income certification guidelines. You need to understand the whole process of evaluation. If your offer is accepted, what to do. If your offer is rejected, what to do. And I give you a few tax planning pro tips. Thank you so much. I'll speak to you another time, but until then, remember, stay marvelous.